And I want to bring him in. He's actually in the chair. And Mark, you took the opportunity during the drama of Brexit to back up the truck and go equity shopping during the sell-off. What did you buy?
Yeah, investors always seem to make the same mistake, which is they get this Armageddon premonition and then they sell that think it's never going to get better. In reality, it always gets better, sometimes short-term, sometimes long-term. So what we were doing is when the market dropped, we were buying Japan while it was low. We were buying Europe, UK, rather. We were buying small European, UK stocks, and then we were also buying small value stocks in the U.S. You know, everybody knows you buy when prices are low, you sell when they're high. But it's really hard to do because your stomach and your gut tells you not to do it. That's what investors need to focus on.
And we've got 3 minutes to go before the closing bell rings. The Dow holding on to gains of 200. But let's talk about small cap value. You know, a small cap growth had done really well over the past year. And so you would say, well, that trade's over. You're going with small cap value with names like, we could put them up, CTS Corp. You also like Gibraltar Industries, which is a housing play, components maker. That's a 53% over the past year, though. That gets me a little nervous. You're okay with buying something that's already had a great run-up, Mark?
Well, I don't want investors to go out there and just pick individual stocks. We own over 2,600 stocks in that segment of the portfolio. What you want to do is you want to buy stocks that have a lot of book value, a lot of market value, but a small price. These are distressed stocks, and whether or not it's been up 50%, it's still distressed. And in that situation, research by Eugene Fama, who won the Nobel Prize, says those stocks have a 3 to 4% higher expected return long term. It's really hard to buy them because they're distressed and they look like dogs. But if you hold them long term, the premium's there.
Listen, all we need is another 113 or 14 points on the Dow before we have erased all of the big-time losses that we saw on Friday and Monday. And as you look right now, with just 2 minutes to go before the closing bell rings, what's the #1 lesson you want to impart right now to viewers who might be watching?
Look, investors need to stop trying to forecast the future. First of all, it was very difficult to predict what was going to happen in the vote. Then it was difficult to predict what was going to happen immediately after. And then it was hard to predict how fast it would come back.
So stop trying to predict it.
Yeah, if you just invest for the next, nobody knows where the next 20% movement's going to be. But we know historically the next 100% movement is up. So focus on the next 100% and try to turn out that noise. It's so hard to do. And whatever you do, stay away from high dividend stocks, stay away from junk bonds, stay away from long maturities.
We got 30 seconds. Why stay away from high dividends? Don't they pay you while you wait?
Because high dividend stocks give you your own money back. The stock drops that exact amount, and you get to pay taxes on your own money. Bad deal.
Mark, thank you. Thank you very much, and we wish you a very happy